Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is the 2nd of June and we're starting from euro-dollar pair. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The price test of 1.0719 coinciding with a significant rise of the MACD from the zero line limited the upward potential of the pair. Even so, market players continued to buy in anticipation of further interest rate hikes, despite inflation in the Eurozone starting to slow down. Clearly, market players do not expect any changes in the European Central Bank's monetary policy. The empty economy calendar today will push traders to focus on upcoming US labor market data, as growth in unemployment and disappointing non-farm payrolls will convince the Fed to continue its tight approach to monetary policy. Only a pause in the rate hike cycle will weaken dollar demand and lead to a further rise in euro-dollar pair. For long positions, buy euro when the quote reaches 1.0780 and take profit at the price of 1.0816. Growth could occur. However, when buying, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after 2 consecutive price tests of 1.0754. But the MACD line should be in an oversold condition this time, as only by that will the market reverse to 1.0780 and 1.0816. For short positions, sell euro when the quote reaches 1.0754 and take profit at the price of 1.0722. Pressure may return amid very good labor market statistics in the US. However, when selling, traders should make sure that the MACD line is below zero or is starting to slow down from it. Euro can also be bought after 2 consecutive price tests of 1.0780, but the MACD line should be in an overbought condition, as only by that will the market reverse to 1.0754 and 1.0722. The next stage of our review is the next major, GBP USD. This trading plan is presented by Petar Yakimovic. GBP USD has been trading upside as we expected. The momentum is still strong to the upside and there is a chance for the higher prices towards upside references. Due to mid-long-term upside trend and the short-term upside momentum, Petar sees potential for the further growth towards the upside reference. Upside objective is set at the price of 1.2670. MACD oscillator is showing bulls reading, which is good sign for the upside continuation. Key support is set at the price of 1.2310. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapas. Early in the European session, gold is trading around 1980, above the 200 EMA and above the 21 SMA, located at 1961. The price of gold rose from a low of 1953 to a high of 1983, a recovery of about 30 USD. This comes on the back of the US dollar's weakness due to the approval of the agreement on the debt ceiling in the House of Representatives. On the 4-hour chart, we can see that gold is trading inside an uptrend channel formed since May 29. Gold is expected to continue its rise in the next few hours only if it trades above 1978. Long positions are possible with targets at 1993, 100 Fibonacci level, and at the psychological level of 2000 USD. Conversely, in case gold falls below 200 EMA, we could expect a technical correction towards the bottom of the uptrend channel around 1967. With a sharp break below this channel, the price is likely to reach 1960 and 7-8 Muri level around 1937. In the next few hours, we should be braced for strong volatility because the non-farm payrolls data will be published in the American session. This could trigger a strong momentum in gold, and we could expect it to reach the 1993. This resistance and even the psychological level of 2000 USD. If the report logs robust employment in the United States in May, we could expect a drop in the gold's price below 1978. The instrument could reach 1966 or even reach the weekly support zone at about 1950. Our trading plan for the next few hours is to buy above 1978 or wait for a 4-hour close below 1975 to confirm sell positions. The Eagle indicator is in an undecided area, so we should wait for a clear signal to be confirmed. And finally, here's Lowry Bailey with USD JPY pair forecast. Let's have a look. The USD JPY pair has reached the corrective level of 138.52. Now it may reverse upward towards 142.25 or break the support towards 136.50 to the MACD line on the daily chart. However, it may not reach this target as there are two intermediate levels along the way, 137.78 and 137.10. It could reverse to the upside at either of them. In addition, the modern oscillator has not yet left the area of the uptrend. We'll find out later on, as employment data from the United States will be published in the evening. On the 4-hour chart, the price has stalled above the level of 138.52. The indicator lines exert pressure from above. The modern oscillator is in a negative area but has stopped falling further. We await further developments. That's all for today. See you online soon. Good luck.